everyone, I'm Alex Blum. I am the co-founder and chief impact officer of Applied Bioplastics. So at Applied Bioplastics, we are decarbonizing the plastic industry and changing the future of polymers. So plastic is essential to modern society, and despite many efforts to reduce, reuse, and recycle, humans are using more plastic than ever before. Now, we're not talking necessarily about low-density polyethylene grocery bags, to-go cups, things that 200,000 years of humans' history was fine without. We're talking about the things that have driven the economy today: toys, tools, technologies, transportation, these things that have gotten cheaper and lighter and more accessible to more people. That is the demand that's driving this growth in the plastics market. And these are plastics that humanity needs. Now, besides the obvious trash problem with the single-use plastics I mentioned before, the major downside of all this durable plastic that I just talked about is that it currently accounts for about 7% of annual carbon emissions. And this is expected to grow to 20% by 2050. Now, again, there are efforts to temper this demand through reuse and recycling, and I'm so glad to hear that there's a plastic recycling technology with us here today, as well as plant-based alternatives. Unfortunately, these are limited primarily to packaging, which leaves 2/3 of the market virtually untouched. So how do we improve the sustainability of the durable plastic items, the items in black here, that these efforts don't address, like containers and furniture, appliance housings, building material, transportation components? Well, at Applied Bioplastics, we have commercialized a platform technology that allows us to produce durable biocomposites that are mechanically identical to the plastic they're replacing, which enables their use in standard manufacturing processes. This means that there's no cost to adopt for both the people who make plastic and the people who use plastic. So we've been through several internal and external plastic molding trials, and we now know with certainty that our plastics work in a wide variety of applications. About 80% of all of the applications for polypropylene, which is the world's most used plastic, we're working on a polyethylene that we expect to release later this year, and we're targeting about 80% of the use cases of polyethylene in durable applications. Now, how have we done this? Essentially, our durable polymers incorporate sustainable plant fibers that are available all over the world, which reduces their net carbon emissions compared to the incumbents. Because both the plant fiber and our proprietary processing technology are inexpensive, we can actually win today against the big petrochemical players on price. That's not something any other alternative plastics maker has been able to do thus far. Also, obviously, we're slashing those carbon emissions for hundreds of thousands of products. Now, as I mentioned earlier, our solution is easy to adopt for both companies that produce and companies that use plastics, because we built our technology around the existing production, so there's no cost to adopt on either end. Now, we are the hottest brand in composites, which does help us hire. We've won every industry award we've entered in the last 2 years, and the last time I put out a job break, I got 1,400 applications in the first 48 hours. This competition slide here is interesting because we don't necessarily see the rest of the market as competition. We see them as potential partners. So, with regard to the general petrochemical plastics, the virgin resins that you see on the market today, we can make those cheaper and greener. For the specialty petrochemical plastics, the current composites, other things like that, again, by using our carbon negative additive or co-feedstock, we can make those cheaper and greener. And for the nascent and costly alternative bioplastics, the total conversion of biomass plastics, the ones that, they're 300 to 500% the cost of commodity plastic today, but are much greener and don't use oil, we can actually also make those cheaper and greener. We are compatible with bio-based plastics as well. So we're relevant to the entire plastics market, and we can make everybody cheaper and greener. As I mentioned earlier, we've won a ton of awards. I'm just going to skip through this here to get to our pipeline, which is really important here. So we've built a sales pipeline for our thermoplastic product that contains nearly 40 global brands, with multiple paid pilots underway with some of the largest manufacturers in the world, including nascent partnerships with several petrochemical suppliers. We've advanced $90 million of our $400 million pipeline into the paid pilot phase. And it should be obvious why we're seeing so much traction after only 3 years of work. Number one, we have a solution that meets every need of the current market while solving an issue that is top of mind for nearly every major manufacturer. And number two, we've taken away the cost of adoption, the barriers to scale, the limited feedstocks required by specialty plastic producers, and the cost difference between alternatives and the incumbents at a time when most manufacturers are making public commitments to reduce their environmental footprint. Guys, we do have a tiger by the tail, but we need your help to put it in a headline. We're currently raising in order to get to sign commitments from several of our prospects. We have 38 immediately seizable opportunities that span industry and manufacturing. Now, of course, this is a complex handshake type of sale. And while we recently poached an amazing head of sales from a major petrochemical player, we need to hire the rest of her department.
Gong. You said you wanted a gong, right? I'll give you a gong.
All right, 5 seconds. We're changing the future of plastics, and if you are interested in joining us, I want you to reach out. Join us and see how sustainable plastic can be.
Let's see how sustainable plastic can be. Alex, thanks for sharing. Thanks for what you guys are doing. I find the entire business, as you know, fascinating. I'm going to bring in our other investor panelists. I've certainly got questions, but first, I think I should hand things over to Ben with OGCI, since this is right up his alley. Ben, do you want to kick things off?
Yeah, I saw one logo of one of our LPs was there, Total. But there's genuine interest anyway also to decarbonize. So I can echo your comments definitely in that. Now, I'd be curious how you see it's a very complex value chain that you operate in. How are you planning to participate in that and enter the market? And B, also, and obviously extract the value appropriately, and what business model you be running on? So I might have missed that, but
certainly,
if you could elaborate.
Yeah, I mean, the business model is complex, which is why I leave it out of the pitch. It would take me all 5 minutes to get through the business model. But in short, today, we are selling our plastics directly to manufacturers. We have our compounding partners. In some cases, we even have our injection molding partners who are making those parts for the brand manufacturer. We're doing this because we need to prove that our material actually works, right? I can't walk up to Exxon and say, hey guys, pay me hundreds of millions of dollars to use my technology with absolutely no customers that I'm bringing to you, right? So we're going elephant hunting. We're working with some of the largest manufacturers in the world, some of the largest users of polypropylene in the world. As I mentioned during the pitch, we have got a ton of traction with those guys. Some of the like literally the largest CPG company in the world. I'm not going to say their name because I have an NDA, but they paid us to test our plastic, right? And a substantial deal of money have given us nearly a year and a half of their resources to work through and find exactly the plastic mixture that works for them, right? So, we're really optimistic about where we're going on the direct sales approach. We're also working on channel sales. We have 2 distributorship contracts that we are hoping to have closed by the end of next month. And then lastly, licensing, right? So our technology is extremely lightweight. As I mentioned, you don't need to change your machines to use our plastic. There's no process difference. And for our part, what we're able to do, and this is going to pre-answer another question, so I'm going to take a little bit of extra time here. Where do you get the fiber? What kind of fiber is it? Cool thing is we can use waste fiber. We can use farmed fiber. We can use fiber that was dedicated to remediating brownfields, industrial sites and things like that. So all of these things are things that we can encompass into our feedstock. And the way that we do that is we have small, lightweight fiber treatment centers that are close to the source of the fiber. You don't want to be shipping low bulk density plant fiber internationally. That would betray, not only our cost advantage as well as our carbon advantage, right? You're putting a bunch of loose fibers on a shipping container. That's not going to work, right? So we treat and densify the fiber on site or very close to where it's being grown. And then we ship it to our compounder. Now, that compounder can be one of our partners, or more importantly, it can be one of the partners of our customer or our licensee, right? So that's where we kind of fit into the value chain, is just above the compounder. And for companies that want to get greener, whether they are a brand manufacturer or a feedstock manufacturer, a lot of the time they're selling compounded plastic, right? So the folks that sell compounded plastic would license from us. The folks that buy compounded plastic would buy from us. So that's the simplest way I can put our business model.
Appreciate it. And if I may, I'd like to follow up particularly on the feedstocks. So on an even comparison, if I don't know what is your beachhead market or your primary application that you're going for, but on that specifically, have you analyzed the emission footprint or the carbon intensity?
Absolutely.
Side by side, apples to apples, means for the whatever plastic you're going after?
Yes. So actually, one of the first assets we ever created as a business is this gigantic matrix of not only every fiber type that's possible to use with our current technology, but the local power source. So like say like India is going to be coal, France is going to be nuclear. I mean, like, you know, where that fiber is grown and where it's being, you know, ground down and treated and where it's being compounded all matter to the life cycle of our plastic. So we have this enormous matrix that goes through cost, CO2 cost, you know, quality of the fiber, quantity of the fiber, quality of the energy that's being used, you know, the sustainability of the energy that's being used. And we use that matrix to make decisions about where to put our first facilities. So, you know, as I mentioned, Europe is a big target for us because of, you know, the reliance on nuclear energy in some parts of Europe. That's a great target. You know, natural gas isn't great, but it's certainly better than coal. So, you know, places like Texas and you know, the central United States are also really good places for us to post up because, you know, they have that better energy, they have that access to the fiber. Now, as far as the beachhead applications and, you know, which fiber to use, you know, we are targeting 80% of the applications of polypropylene. So, you know, we're looking very heavily into, you know, automotive, aerospace. Right? Like your car is like 80% plastic these days, and that's a good thing, right? That's why you get 40 miles to the gallon. But those take a long time, right? So we're starting out in durable consumer products and goods. That seems like that's the closest thing. So we're talking about pens and Tupperware and, you know, Tupperware, not the brand, but you know what I mean? Like food storage sort of stuff, you know, any sort of household item is our beachhead. One of the advantages there is that a lot of that is injection molded in India, where our first facility is already located. So, you know, we're able to get to both the fiber and the customers and the compounders and the injection molders all in the Maharashtra area of India. So that's where we're starting out. And that's our beachhead.
I got a follow-up question. We talked back in, I think, March or April, and we, at the fund size, we just couldn't get conviction on it, mostly because we didn't know the space well enough. And we had some other priorities we had to get to. And I really liked your company. And it seems like since then, everything has just gone gangbusters for you. I just saw your Excel spreadsheet there, and it looks like you signed a lot of contracts this month. Congrats. So my question is the other shoe. What isn't working? What are you worried about? Like right now, it just seems like everything is up and to the right.
Yeah. So, you know, I think full adoption is where I'm concerned, right? Like, you know, we're getting to LOIs, we're getting to commitments, you know, we're getting really close with a lot of these customers, but, you know, I'm a salesman by trade, right? I've been an enterprise salesman for about 10 years now. And I know that until the check is deposited and the product's on the way, it's not a done deal. Right. And so I'm concerned about that. You know, I that's what keeps me up at night is, you know, following through and executing. The other thing that I'm concerned about and why we're raising right now is I don't yet have the capacity, right? Like, oh, actually, I do have the capacity, but it's through partnerships, right? So I've got compounders, I've got people who treat my fiber, but in order to protect my IP, those people who are treating my fiber, you know, there's 3 different steps. It's 3 different companies doing it. So one guy does one step, then ships it to guy number 2, who does step 2, who ships it to guy number 3, who does step 3. And then finally it goes to the compounder. As you might imagine, that's really expensive. And so, you know, we're going to be losing money on our first few shipments of plastic, which is why we're raising. You know, if we can bring the fiber treatment process in-house, all of a sudden, not only are we able to match price with what's out there today, but have an enormous margin. You know, I don't want to disclose the margin because it's nice, but the point is, like, we can go and healthily beat companies like Exxon and, I'm very sorry, Total, by 10% on the cost of a commodity feedstock. We know that we can get there if we bring fiber processing in-house. So that's what keeps me up at night is, am I going to get 40 orders in the next 6 months? And like, if I do, how much money am I willing to lose? Am I going to be able to set up my internal capacity in time to serve those orders? Or am I going to have to push people off and ask them, and I'm so sorry about the lawnmower in the background here, but am I going to have to push major companies off that I've spent years working on these deals and say, I'm so sorry, I know that we've just gone through 2 years of testing with you, but you know, I can't serve your needs for another 6 months while I'm setting up my capacity, and I just can't lose that much money, right? So bringing capital in now and pulling a very short-term Tesla where I'm losing money on my price competitive thing, you know, right up until, you know, the revenue starts coming in, that's the other thing that keeps me up at night.
Okay, fair enough.
So is that the status of most of those contracts now? You're basically waiting either on finalization with them or them to put through orders?
No, I mean, I wouldn't characterize most of our pipeline like that. I think there's a handful of high volume deals that are in that stage. There's a bunch of other deals that we're working through, but at the same time, I don't want to say we're like sandbagging, but it behooves us to not push really hard on parts of our pipeline. Because again, I want to build some capacity, and I want the trust of investors like you guys to see my pipeline, say, look, we're going to go enable you. We're going to give you money to go make sure that you have the capacity to meet this demand that you guys have created. So I'm relying on you guys, and I'm grateful to be here. But if people are cutting checks, that's going to be really, really helpful in terms of making me sleep well at night and having the capacity to serve these customers and being able to push my pipeline forward.
How much capital do you need to hit that point where you can turn the corner?
I think about $6 million.
So a seed and then maybe a small seed plus.
Something like that. Yeah. I mean, project finance, once we start signing these contracts, I mean, like, if you guys don't want my equity, I'll go ahead and get some debt from a bank and do it that way. But, there's a couple different paths, right? And I think once we start getting like purchase orders and whatnot, we can go finance the necessary equipment if necessary. So I'm not too worried about it. I say it keeps me up at night just because, there's so many paths available at this point, and I'm just kind of running through them over and over in my head. But yeah, so about $6 million that gets us through, multiple facility setups. It enables several key hires, including filling out that sales team that I mentioned during the pitch, and pushing those deals forward to completion.